In this video, we're going to talk about how we can use price action rules to help us navigate the market, predict where the market is going to go, and where are the high probability setups to enter. So right now we're starting with a little bit of a bullish bias, slight bullish bias, but the bullish bias is there because uptrend played out, followed by downtrend playing out as well. And now we have push above EMA. Initially, I'm going to draw tight channel like this, which is something as a price action trader I always have to do. There is always a channel present for every single price movement on the chart. It explains how prices react. And because market keeps working higher and it's not being interrupted, you can see the momentum is really kicking in. I have to identify broader channel because moves in price action, they have to be proportionate. And this tiny channel cannot take into consideration this long seamless push working higher. So I'm going to take a look at the very beginning of the move. And I'm going to draw right now wider channel, something like this. It is still tight channel, but wider compared to the first one. And this channel fits well. Candles are nicely inside. And this is giving me right now bullish bias. Okay, so the market is really getting more bullish, which is important. This means that I'm not thinking about selling no matter how good the signal bar looks. I'm only thinking about long opportunities at the key entry point. Where's the key entry point? For example, EMA, trend line, and for example, some small support. So let's see what's going to happen. We have right now market that keeps going higher, so momentum is there. We are correcting, and right now I'm going to draw short-term channel, something like this. This is really close. I can draw it a little bit wider because it looks quite seamless, so we can't really go wrong drawing it a little bit wider, something like this, just to be sure, because there's always correction present during every single market. We have a new high, first entry long, second entry long. Of course, I cannot go long above a bearish bar that broke below EMA. If I want to go long on a high probability setup to like a pullback, number one, EMA must hold, and number two, it needs to be a bullish bar. So right now, nothing is happening. Market is correcting. Okay, we have some triple test established, so you can see buyers, they deem this priceable worthy. EMA keeps holding. The downtrend is right now over. Break, attempt to test the new low, and we have high low right now, confirmation setup of this second entry long. Okay, but what we have to remember that this high low initial one was a doji below EMA. Even though we have triple test, I don't think it's strong enough yet. But the secondary bar is much better, and we can consider double bar entry because we also have the triple test. Okay, second entry long, back above EMA. So the secondary bar can be considered. It's a nice bullish bar, and it is a high-low triple test. Market keeps working higher. So this was the high probability setup. Correction phase ended, push phase started because we expect new high following the trend line rule for this uptrend. This is giving us direction because we expect new high. So now we just have to identify the right entry. This uptrend played out, but because market, if I'm going to zoom out, is quite bullish, I like drawing even wider channel because yes, this uptrend played out, but what about this bullish push at the beginning of the move? This is where the real uptrend originated from. So I want to incorporate this move as well, not just this one. So if I'm going to draw a bigger channel, something like this, it's not fully confirmed yet, but it is a potential channel that I'm taking into consideration because it explains price action. I take into consideration even this move and this move. If you're not sure, you just simply wait for more confirmation, which is always a safe thing to do when you're watching this live. If there's a, for example, second entry long into EMA, you may consider skipping because this uptrend just played out. And the secondary one, the bigger one, is just a potential channel that needs some high low or failed second entry short or something like that, more confirmation. You have a new high here using the counting technique. First entry long, of course, first entry long I have to skip. We're correcting lower. We have a second entry long in no man's land. I don't want to take it. Second entry long below EMA. And market keeps pushing above EMA. And now we actually have high-low confirmation setup. Okay, and this is what we talked about. This right now is confirming the wider channel a bit more because downtrend played out, broad correction push to new low. We have now high-low confirmation setup of the second entry long. And it also can confirm the fact that the wider channel is in play and we can have a brand new push phase. I'm going to mark it a little bit more aggressive because it's not super easy. Although now that I'm thinking about this, I mean, it can be marked green. It is quite good. But if you're watching this live and you're not sure about the channel, you may want to wait for failed second entry short. And now we have the failed second entry short, which is a great high probability setup because this is a stronger trap. Another bearish bar, they get trapped. This is a great high probability setup. You can even mark this green, no problem. I'm going to keep it like this, just slightly more aggressive, just because high low is a little bit weaker. But the failed second entry short now is sealing the deal. You keep your stop loss one tick below the signal bar, so even the high low still ended up working. Even the failed second entry short, as you can see, this is why we keep the stop loss one thing below the signal bar. Now we have high-low breakout pullback, which would be good setup, high-low breakout pullback, because price action started to go a little bit sideways after these two trades. We had two bar that stole the price action a little bit, so this would be some breakout pullback, great high-low confirmation, but the signal bar is so neutral, so doji. I don't think we can take it, but it's a great high-low breakout pullback. You break out of the congestion, most breakouts fail, you go back, you test it, price action is telling you everything, and we're going higher. Okay, right now we're correcting. We have a second entry low, but we're so far from the EMA we can't really take it. Market is correcting. I'm going to draw downtrend working lower, something like this, and what I'm going to do, I'm going to draw small consolidation, simply because we're going sideways already from this point. EMA is flat for quite a while. I expect new high for the big channel. So I'm leaning more towards consolidation instead of straight reversal. It makes more sense combined with the flat EMA to expect new high, but I need downtrend having a new extreme and then some push above EMA to resume new high. I don't want to go long below EMA because I need the push above EMA because the downtrend is in play. Okay, this is interesting because we have right now downtrend that has a break push to a new extreme, but when I was watching this live, you can easily make a case for downtrend to be just a tad wider, you can see, and it still fits pretty good. The break is so tiny, I don't think you can go long here. If there's a clear break push to a new extreme, you can make a case for the high low, but since you can make it a little bit wider, I think it's a little bit too early. And now you have a failed second entry short. Once again, you're using the counting technique, lowest low, first entry short failed, second entry short failure, but we broke below the EMA. Now you actually have the support here. You have the support, so it's okay to be buying at this level a little bit below EMA because you have the support. But still, how big is it? Only 275. It's not that big. I mean, you can consider, if you have breaking new extreme for the downtrend, it's a stronger setup. Not a horrible entry. You can consider almost new high, not really. Very close to getting new high. You can see very close, few ticks away from getting new extreme. We have felt second entry long, but I think it's a little bit too early because short-term downtrend almost played out. We've been working higher the entire day. Yes, you have new high at 10, but what if there's going to be the last push testing new high and then market reversing? I think it's a little bit too early to take it. It ended up working. You have to ride this out for a long time, but it did work in the end, and market continues to trend lower like this significantly. Okay, and we can see massive trend working lower. So market is considering this as a new high attempt enough. We came very, very close. So perfect market cycle, uptrend breaking new high, a little bit of consolidation, straight into reversal. You can initially look for channel like this, but because you keep getting so many overshoots like this, this is a good sign that there's probably a channel that you can play, and it's going to be more helpful. If you start from this point where the bottom really dropped, and you can really have better fitting channel, tighter one, it reflects price action a little bit better. Okay, so nice channel, and you can see we're just following the same price action rules. Okay, so price action trading is about identify the structure, locate key entry point, and wait for high probability setup. So the uptrend played out. This is massive retracement, massive reversal, so structure is bearish. We have the key entry point, we have overshoot, so now it's only about waiting for market to correct to the key entry point. That's all I'm doing, just waiting. I'm not selling so far from the EMA. I'm going to draw uptrend like this, especially after overshoot. Okay, I don't think we can go short here because we have the uptrend in play. We had overshoot. I really think we need some lower high confirmation setup. EMA is nicely holding, indicating sellers are present in the market. This is what I like to see. Break below, and now we have lower high confirmation setup. Downtrend needs to get new extreme tested. It's a double bar entry. We didn't break higher, but we broke below. This is a great lower high confirmation setup because downtrend is new low. And we can finish the day with a failed second entry long. Failed second entry long. Downtrend is new low. It's not super close to the EMA, but it's close enough. Context is clear. I took these both trades, and downtrend played out with the break push to an extreme, and now the market is about to close. So this is the overall structure for today. This ended up being a really nice trading day because, as you can see, we had fairly straightforward price action. We started with nice uptrend working higher. where you're only thinking about buying, no conflicting variables, then you have to be a little bit patient here because you have conflicting variables whether there's wider downtrend or not. And then I think you have to be also a little patient here because you have conflicting variables whether there's going to be some one push up market was a little bit too bullish, but then market reversed down, and this is where you have absolute zero conflicting variables. And this is the structure I absolutely love. This is like market offering you free money. We love scenarios like these because it's super clear. It's super clear. We have only one structure, and this is bearish trend down. Once EMA keeps rejecting every time, this is a sign, okay, sell side in the market, and you just take the high probability setup. You take the lower high, you take the failed second entry long, and you get the new low. And what's important to remember is that you don't have to scrutinize the trade absolutely perfectly. If the context is clear, you can predict the trade in advance, and there are no conflicting variables. For example, here, this wasn't the greatest signal bar, but it's a double bar entry and it's good enough, okay, because everything aligned and context is clear. Same thing here, the failed second entry long. It's not perfectly at the EMA, but everything else aligned, okay? There's no bullish case to be made whatsoever. So you can be a little bit more aggressive when everything aligns and you are expecting the setup beforehand. It's where you have to be more careful where you're not sure if the secondary channel is confirmed, for example. You're not sure if there's a broader channel or not. That's when you're a little bit more careful with your analysis. But once everything aligns and everything is clear, you kind of have to pull the trigger and take advantage of the structure. So it ended up being a really nice day. Market really slowed down throughout this area. I thought we're not going to get any trade to finish the day, but towards the close, the last hour, market dropped lower and offered decent trades. So it ended up being quite a good trading day following price action rules. Uptrend, break new high, attempt, reversal down, break new extreme. So I hope the lesson was helpful. I hope you had a great trading day, and I'm going to talk to you next time. Good luck your trading.